From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 15th, 2016. I hope you had a great weekend and are ready to get started with trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we'll be watching for new trading opportunities this week. We have a relatively slow news calendar for the U.S. trading session today to start the week off here on Monday, but we do have some events throughout the week, and you'll want to check your financial calendars for those latest releases throughout this week. Let's get started here on the USD CHF, US dollar versus the Swiss franc. Over the past several months, we've been studying this downtrend channel. What I'm talking about is what's between the two red trend lines that you see here on the chart, the falling trend channel. And what's probably most important about that is we're at the very top of that channel towards the red trend line at the very top. We have capped out at resistance levels in the low 9800s for the past couple of weeks. Falling back down last week on a sell-off from the low 98s back down into the low 97s. We do see this week that the Forex Black Book trading indicator or trend indicator has turned red, so that could be an interesting foreshadowing if this does indeed break through 97.35. Let's begin to zoom it in here a little bit. On the daily time frame, the black box is probably what's going to be most interesting for the day today. If we see consolidation through this first part of the week with no significant news today, we could see the market bounce around in here, finding support over the past 1, 2, 3, 4 days here into the mid to low 97s. What it's going to take, if we're going to see this to go lower here on the US franc, it will need to break through 97.35. Incidentally, the 100 period simple moving average sits right there at 97.35 as well. So we need to break through this yellow zone, break through, open and close likely underneath 97.35 if we're going to see this continue to pressure lower all the way back down here. So if you're looking to go short, let it get through there before you decide to go short. Otherwise, continued support here could see another rally back higher from the low 97, low to mid 97s all the way back up into the 9800 level and the orange shaded area at the top of this black box. If we see any rally in the dollar this week, we'll see it put pressure back towards 98, and anything above 98 could see a little bit of a push higher, retracing some of this fall that we saw a few weeks ago over here on the left-hand side of the chart. If we bring it out a little bit more here, we could see the continued fall back down here towards the blue zone, but even further down, back down into the 95s is a possible opportunity if it does break this last low that we see here on the daily time frame. Down to the 4-hour time frame, zoom it out. Not in, and you can see the congestion inside this yellow zone. Probably your first and next clue that you're going to be looking for is either a push above 97.55, which is the top of the yellow zone, to go up, or below 97.35 for this to go back down. We need a breakout of this consolidation pattern right now for the US franc. Moving on to the EUR-USD, the euro versus the US dollar. Similar yet opposite situation, but here on the euro dollar we see the falling green trend line. What's interesting about that falling green trend line is the market has held underneath there the past couple of times, challenging near that green falling trend line. We've been in somewhat of a consolidation range here as well for the euro dollar, the black box, since the Brexit news. Let's go ahead and zoom it in one time. Since the Brexit news over here on the left of the black box, we've been inside this range. Blue zone at the bottom into the 109s as your support, up here into the 112 level as your resistance, and we're challenging that again today. Past couple of weeks, we've seen 2 times challenging very close to the green trend line, like I said, and that 100 period simple moving average. We're underneath it right now. So as long as we're underneath there, there's the potential for some reversal to go back down, but definitely watching for the breakout of 111.80, 112 could begin the rise here for the euro dollar. Zoom it in down to the 4-hour time frame. Here's some interesting things here. Very similar yet opposite, like I said, of the US franc. We see some consolidation, some congestion right around the 111.80. Last week, we attempted to break it, very short-lived hop, and now we see it pushing back underneath. So again today, if I'm going to go long, if I was even considering going long, it will be imperative that it breaks, opens and closes above 111.80. So far it has not done that. That was a false breakout. We need an open and close above 111.80 if we're going to look for this to go higher. Otherwise, continued resistance here And further evidence of reversal could see this head on back down towards the 111 level, the green shaded area down here, or even lower as it continues to pressure down. Interesting, we don't see any change over here on the Forex Black Book. It remains green. So if you're looking for a buy scenario, again, it needs to dip to support or break through resistance if we're looking for the continuation higher. Otherwise, this resistance still holds tight right around the 111.80 level for the euro dollar. Moving over to the GBPUSD, continues to fall. The pressure continues to be bearish here for the GBPUSD. Continues to challenge multi-year lows down into the 128 level. Is that what we're looking at down here? It's kind of hard to see those numbers on the right-hand side. Let's go ahead and take it on down to the 4-hour time frame. 128.75 is what that number is at the very bottom of the orange shaded area at the very bottom of the chart. That's very interesting because we could see, of course, on the left-hand side, that's the last lows we saw right after the Brexit. The market challenged here into the mid to upper 128s and now has challenged there once again. If we're going to see this go lower, it's going to be imperative that it breaks through 128.75, which of course it hasn't done yet. We can see it challenging into the green zone, falling down to the orange zone. If we're going to see this go lower, it will be imperative that it opens and closes underneath 28.75 for this to go lower. If you're looking to go short, which we did last week, we went short last week, made a decent amount of profit here on the GBPUSD. If we're looking to go short, look at the pattern that we have set up here. And I will just take a couple of more circles here. Look at the pattern that we have set up here. This red circle here, the rise, the resistance, and then the fall. Just the blue circle right before that, also the rise, the resistance, and the fall. Let's take another one here. We can see this pattern right here, the rise, the resistance, and the fall. So let's look for something very similar to those two red circles here over this week. We'll watch for a new breakout underneath the orange shaded area, potential rise and resistance under the orange shaded area, similar to what happened these last two circles, and the continuation lower. Otherwise, watching for potential short-term support and reversal here could be an opportunity for the GBPUSD. Moving over to the US CAD, we've been studying this blue trend line over the past several weeks here for the US CAD. It's been predominantly a rising trend pattern, but we do know that if it breaks underneath there, we could be looking for some pullback or some fallback down here for the US CAD. It was interesting last week. We had a rise in oil prices. The rise in oil prices produces a sell-off here on the US CAD. So rising oil prices last week, we see this falling back down. If oil prices find resistance at all this week and start moving back down, we could see some rally back higher for this currency pair off of the blue trend line. Zooming in a couple of times here on the daily time frame. There it is, challenging the blue trend line today. Hasn't broken it, but challenging it. 100 period simple moving average also sitting right around this 1.2930 level or so at the bottom of the blue shaded area. So if it's going to go down, if it's going to continue to go lower, we need a couple of things to happen. It needs to open and close under the blue zone. That would be our first clue for a continuation lower down towards the orange shaded area down here. And we also need to see the continued rise of oil. If oil continues to rise, then I do think we'll see the breakdown of 29.30 and the continuation into the mid to low 128s. If oil starts to fall back down, we could see support, clues and evidence of reversal, sends this back up again from the 100 period moving average, and we might even look for a new high depending on how far and how low oil decides to go. So continue to watch those oil prices for some familiar direction or opposite direction here on the US CAD. 4-hour time frame here. We see today the market attempting to break out here. Again, I'll look for the open and close. But if it does open and close underneath 29.40, 29.30, we could, again, see the push all the way back down to 28.70, the orange shaded area. Watch this current 4-hour candle. If it stays underneath here, I do think we're looking for the continuation towards the orange zone for the US CAD. Moving over to the US yen, we are at multi-year lows again, right into the 101, 100.60 level, the blue shaded area at the very bottom of the chart. We see the red circle highlighting support here, the black box highlighting support here. We are into support, so it's a very difficult place to go short for the US yen. If you're looking to go short, it's imperative that it breaks through that black box. Let's go ahead and zoom it all the way in here. You can see finding support here past couple of weeks. It has to break that before it will go lower. So if you're looking to go short, don't do it unless it goes through 100.60. If it gets through there, then maybe you could go short. But on top of there, very difficult to go short. In fact, it could produce some intraday scalping opportunities for bounces back higher. If it decides to find some support, rallies back to 101.50, the pink zone, or even all the way up to the yellow zone into the 102s, that could provide some intraday profits as it bounces off of this multi-year support, as it has for the past couple of weeks. And again, the only reason to go short is if it breaks through this blue shaded area and the 100.60 level. Or I suppose the next opportunity to go short would be the pink or the yellow shaded area on any rally higher. 4-hour time frame, again, it doesn't change anything. We just know that it's going to have to break through that blue zone if it's going to go lower. If it can't, which it hasn't done yet, we could look for those intraday bounces back higher again for the US yen. AUD USD, I'm starting out here on the weekly time frame because I think this is a very interesting look at this currency pair. Look at the red trend line, the long red trend line. We're looking all the way back from 2013 connecting into 2014. That's important because we're just underneath that right now. So I think you don't want to forget about that guy right there. We've had to rally back into it. So the interesting thing is, if it stays underneath there, are we going to look for a reversal, or are we finally looking for a breakout and a turn back higher here for the Australian dollar? We'll have to continue to watch this over the coming weeks. Let's take it down to the daily time frame. There's that red trend line just peeking at the top right-hand corner. Why is that interesting? Zoom it in here on the daily and take a look at where the market over the past week or so found resistance right into that red trend line. So that's an interesting aspect here for the Australian dollar. Take a look at this as well. We see the Forex Black Book has turned red this week. So that could be our first or next clue that we could be looking at a point of reversal. We have the Forex Black Book trend indicator turning red or bearish. We have the market challenging that long-term weekly trend line. So let's continue to watch for other evidence and clues to reversal before we take a short. If you're looking to go short with last week's move into the resistance, then we obviously want it to go up before it goes down. Let's take it down to the 4-hour time frame. We see resistance into the green zone. 7,700 is a very interesting level, the green shaded area. So if I was going to go short, there's two reasons to go short. Back into 77, we know what our risk is at that point. The risk is a break above that green shaded area, so we wouldn't want it to do that. So if we're looking to go short, back into 77, that becomes an opportunity. Or the breakdown of 76.50, 45, the blue shaded area that you see here on the chart, that becomes an opportunity as well to take it short again for the Australian dollar. Now, on the other side of this, if we start to see some short-term rallies again, getting back above this little free fall right here, back above specifically probably the green shaded area, we'll look for a challenge of the high. So green zone is going to be critical. Resistance there could go back down. Break the blue zone, could go back down. Back above the blue zone, above the green zone, reversal to go back higher again for the Australian dollar. So critical scenarios going on here on the Australian dollar, right around the 7,700 level. Continue to watch for that. I think it could produce an opportunity for shorts into that green zone as long as you're using appropriate risk strategies. Moving over here to the NZD, USD, some familiar scenarios that we've seen for the past couple of weeks. The blue box here, really just a long-term range that we've been in. We need some breakouts here if we're going to see a longer-term trend take hold, either a breakout higher to go continue the upside or break out lower to continue downside. The blue box, very interesting here for this currency pair. Why is that interesting? Because we're still stuck inside that blue box, that range here. And we've been up towards the top of that range for quite a while. Take a look at what happened last week. We saw the spike into the pink zone where we've seen resistance before, the black circle, black box, and then black circle, resistance. Reversal, went back down. We're challenging this green zone. It'll be a critical decision zone as well. Look at these red circles several times, finding resistance, resistance, support, resistance. So as long as we're underneath there, I think we're finding resistance. And the only reason we look for it to go higher is if it breaks back above that green zone today. Take it on down to the 4-hour time frame. Here we are, again, very familiar and similar to the Australian dollar, where we see the fall back down, resistance in the green zone. If you're looking to go short, 72.20 up to 72.45 is the green zone. We know what your risk is at this point. The risk is a break back above the green zone. So if you're looking to go short, the green zone becomes an opportunity, or interesting enough, underneath the blue zone becomes an opportunity because that is your current support. So it needs to break the blue zone to go lower, or this rally and hold into the green zone. Otherwise, above the green zone, above 72.45.50, we could look for a new rally towards the pink shaded area for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.